What's up everybody? Welcome to the Stocks channel. Today the stock market continues the blow off top and we are getting into very interesting territory. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was up 0.94%, and I know a lot of you bears have been shorting since the PCE data because you bought into these narratives that inflation was too high and the market needed to go down and it was likely going to crash. And I know a lot of you bears that were shorting PCE data held overnight and were likely hurt today, so I'm going to save you the victory lap. There's no need to tell you what you already know, which is what I've been warning about, is that during a blow off top scenario, you have to be an absolute fool to bother calling the top. So as I continue to tell you, this blow off top scenario can go as high as it wants to. And the honest truth is that this market will continue to go higher until every last bear has given up. And then once the bears capitulate, that is what puts in the blow off top, and then the market starts crashing back down. So the honest and sad truth of this price action is that we are going higher until the bears give up. And then once the bears give up, we are going a lot lower. So it's a very tricky market because nobody knows when the bears are going to give up. And if you're a bull that continues to buy up here, you are going to be the ones getting hurt when the bears give up and we come crashing back down. So during a blow off top, you go a parabolic rally higher on high volume and then you come crashing right back down. So no matter what you're doing, I don't care if you're going short or long, you need to be managing risk very well. There are going to be amazing short trade opportunities and there are still going to be amazing long trade opportunities. And I'm not here to tell you which ones are the best. That is what I'm doing in my Discord server. And I do actually have a lot of trades that are short trades and a lot of trades that are long trades. And I do think this is going to be a stock pickers market where you can do very well shorting certain stocks and you're going to do very well going long other stocks. That's why I call it a stock pickers market, because it's not so much about what the indices are doing at this point. It's about finding the best risk reward ratios in individual names. So if you want to find those trade ideas, those will be in the Stocks channel Discord server. I'm not going to go over these in the YouTube videos. We're going to focus on the indices and the market moving names that we cover each and every night. So looking forward, looking at SPY, we can see we are following the arrow towards the price target at 514. But if at any point we break down below 507, we need to get risk off because that's the breakout level in the higher low into the higher high. If we break 514, then we go to 517 and then 520. If we break below 507, get risk off because like I said, this is the blow off top, which means we'll likely come down very quickly. And below 507, we'll come back down to 501 and then this gap fill at 497. We'll take it day by day, and this is going to be a very fun market in the month of March. And I do really believe there's going to be plenty of volatility for both the bears and bulls alike, as long as you're focusing on the correct trades with the proper risk reward setups. On the NASDAQ 100 triple Qs, we were up 1.51% today, so we're definitely getting that blow off top look. And we blasted right through 442, and the next price targets I have above 442 will be 448 and then 453. Now, as long as we can hold above 437, this is the blow off top scenario, and I do think the Qs can go a lot higher if stocks like Apple start to participate. So I'm not really interested in being a bear here yet, but we definitely did close outside the upper Bollinger Band, so we're getting very overextended. So in the short term, we may get a pullback towards this breakout at 442 before we can go any higher. If at any point we break below 437, get risk off because we're likely coming back down towards this gap fill at 425. On the Dow Jones, we were up 0.35% today and we got another daily close above 391. We still have the bull trend and the price action above all of the moving averages. So if we're going to blow off this top, we need to hold above 391 and start pushing higher towards 400. As long as we're above 391, it's the blow off top scenario and there's no telling how high we can go. But if we start breaking down and we can't hold this breakout at 388, then I would get risk off because we're very likely going to fill this gap at 386 and then possibly test support down here at 382. So the Dow is very easy. Above 391, we're in the blow off top. And below 391, I would simply get risk off. On the Russell 2000 IWM ETF, we were up 1.06% today, and this ETF is actually faking out a lot of you because there's a lot of intraday volatility, but if you really look at the daily closes, we continue to go higher. Yesterday, we were up 0.7%, and a lot of people felt like it was bearish, and then today we were up over 1%, and there's still some of you who think this is bearish price action. At the end of the day, we're going higher on closing prices, and you can clearly see we closed above the previous highs, so this is definitely higher lows and higher highs. That's why I think IWM is going to shock a lot of you, and I think it's going to go a lot higher than some of you could ever imagine. And I'm even going to go as far as to say I think it's going to a brand new all-time high this year. Now stop right there before you judge me for saying that. I said the same thing about SPY and the triple Qs, and here we are at brand new all-time highs, so maybe you should start to listen and stop talking so much in the comment section. If we break 207, we're going to 214, and above 214, the sky's the limit. And all you need to do in IWM is stay below above 203, and if we break below 203, you can get as risk off as you want. On the ARKK ETF, we were down 0.21% today, and it looks like we are coming down towards this gap fill at 50 before we go any higher, but keep in mind, after that gap fills, I think we're going to 54 and then 57, and this goes hand in hand with my IWM analysis, where I think that's going higher as well. These are very highly correlated, and there's a lot of small cap growth names in this ETF as well. On the VIX, we were down over 2% today, and the VIX is very close to hitting that price target I have down here at 12.8, and after we hit 12.8, we could start to see another spike in VIX and another spike in volatility. As you can tell from the VIX, this is still a downtrending low fear bull market. On Bitcoin, we're currently up about 2%, and Bitcoin is still outside the upper Bollinger Band. And yes, a lot of you are going to call this a bull flag, but in my opinion, this was a blow off top, and I do not believe Bitcoin is going for a new all-time high. I think it's going to come crashing back down. That means we're going to see Bitcoin trading back down at the breakout around 52,000 to 50,000, and then once we get there, we can see if we find support before going higher. Now keep in mind, this is just my opinion. You do not have to sell your Bitcoins just because I think this is a blow off top. If you are a Bitcoin bull who thinks this is going to 100,000, then just stay bullish about 52,000. On Nvidia stock, we were up 4% today, and Nvidia is well on its way towards that higher price target that I gave it around 850, and we just got the daily close above 816. You can see price action bounce off of the rising 5 EMA, and it's still a very powerful bull trend, so there's no reason to be bearish on Nvidia, and it is very likely still going higher. Stable above 740, and right now in the shorter term, you can stable above 816 or this support at 775. On Tesla stock, we were up 0.38% today, and the Bollinger Bands have now fully expanded to allow us to hit that price target at 207. So I do believe we will hit that price target very early in the week. And then once we get to 207, we need to see if we break above it and go into the 220s, or if we get rejected and start crashing back down into the low 170s. Stable above 197, get risk off below 197, and take your profits at 207, and then just get more risk on if we break above 207. On Apple stock, we were down 0.6% today, and Apple did exactly what I expected, which was a bear trap towards 177, and then from 177, I expect to see a bounce higher towards 187 to 190, which I'm calling the face ripper. This is because this looks like a head and shoulders pattern, and the bears are going to start shorting it below 180, and as soon as the bears started to short it below 180, we immediately ripped their faces off, so I'm already looking like I'm going to be correct on this analysis. You can stay risk off below 177 or below 180, but now that we're above 180 and we already had the bear trap, it is very likely that we start ripping off faces. So jumping back over to the S&P 500, follow the price action, manage your risk around these critical levels, and do not let anybody tell you how to trade this market. Have a plan around the critical levels, follow the trend, and know whether you want to go short at certain levels or long at certain levels, and then just continue to follow your plan. At least if you're following your plan and you're not winning, you can go back to your plan and figure out where you're going wrong. But if you're just following other people's opinions, or you think other people know where the market top is going to be, as you've seen, you are going to be continually disappointed. I have seen so many bears trying to call tops since all the way back in the very early stages of the bull market last year, and I have continued to warn you against following their advice because I've seen so many bullish indications. Here we are blowing off the top exactly like I predicted, and here we are at brand new all-time highs continuing to go higher, and those bears have nothing left to tell you except they're going to continue to call every single thing a top every time we make a higher high. Disconnect yourself from those people and their opinions. You're much better off following the chart and then just moving their money into your account. Once you realize the chart is all you need, you don't care about anything else or any other noise, follow the price action and the trend and manage your risk around these critical levels. Remember, as I always tell you, you are a retailer and you can move like water. You can sell your whole entire portfolio at the click of a button. You have no reason to be overly sold or overly convinced of any biases. Follow exactly what the price action is telling you to do. This is exactly what I teach you to do each and every day on the Stocks Channel Discord server, and I am going to continue to help you understand what is going on with the price action and what I think are the best trades with the best risk-reward setups. So stay disciplined, stay patient, and keep working on those trade plans, and you are going to do just fine in this market. If you want to come learn how to trade price action, come join us over at the Stocks Channel Discord server, which you can find out how to join in the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.